Welcome to Stocks Telegraph, your navigator through the vast universe of the stock market. Today, we're embarking on a diversified journey across different sectors, identifying top stock picks that stand out in their respective fields. Diversity in an investment portfolio is like having a well-balanced diet. It's essential for long-term financial health. From the tech giants reshaping our digital landscape to healthcare innovators at the forefront of medical breakthroughs, each sector offers unique opportunities and risks. In this eclectic mix, we're handpicking 5 stocks, each a leader in its own right, spanning various industries. By spreading our investments across different sectors, we're not just betting on individual companies, but also on the broader economic engines that drive growth and innovation. So, if you're looking to build a resilient portfolio that can withstand market fluctuations and capitalize on sector-specific growth, you're in the right place. Hit that subscribe button and ring the bell for notifications to never miss out on our expert market analysis. Get ready to diversify your investment horizons as we reveal the 5 best stocks to buy from different sectors, each with the potential to anchor your portfolio in these turbulent economic times. Before we dive into the details, let's take a moment to like this video if you appreciate our content. Your support encourages us to keep delivering quality insights. Now, let's unveil these market gems and set the stage for your diversified financial growth. Kicking off our list is Uber Technologies Incorporated, trading under the ticker symbol UBER. This company has revolutionized how we think about transportation and food delivery, and it's clear that its innovative approach is paying off. With a striking year-to-date performance increase of 101.86%, Uber is cruising ahead at full speed. The stock is currently priced at $49.92, and market analysts are seeing even more potential, with a mean target price of $59.18. These figures aren't just numbers, they're a testament to Uber's accelerating journey in the market. What's more impressive is the company's earnings per share growth. This year alone, Uber's EPS has grown by a whopping 108.29%, and the forecast for next year zooms ahead to an expected growth of 161.69%. The quarterly earnings growth also stands tall at 113.84%, underscoring Uber's ability to expand profitably. Diving into its recent financial report, Uber has driven home a record-breaking usage of its platform. In the third quarter, the company reported revenues soaring to $9.3 billion, marking an 11% year-over-year increase. This revenue breaks down into $5.07 billion from mobility, $2.93 billion from food delivery, and $1.28 billion from freight. But here's the real headline: Uber has not only reached but maintained profitability from its core business operations, recording a net income of $221 million. This marks its second consecutive profit, steering clear from relying on external investments. This profitability is a clear signal that Uber is not just riding the wave but creating its own. For investors seeking a stock with a solid track record and an expansive footprint in multiple growing sectors, Uber represents an enticing opportunity. It's a stock that's not just keeping pace with the times but setting the speed for others to follow. Stay with us as we navigate through more top stocks from diverse sectors, aiming to steer your portfolio towards a path of balanced and dynamic growth. Next, we turn to a titan of e-commerce and cloud computing, Amazon.com Incorporated, known to all in trading as AMZN. Amazon isn't just an online retailer, it's a technological powerhouse that has its fingers in many pies, from AI to cloud services and beyond. Amazon's current market price is $142.71, with analysts setting their sights higher, at a mean target price of $174.64. This reflects confidence in Amazon's ability to continue its upward trajectory, with a year-to-date performance increase of 69.89%. But the real eye-opener is the company's EPS growth this year, an astronomical 1,078.10%. Coupled with a quarterly earnings growth of 236.58%. Numbers like these are rarely seen and speak volumes about Amazon's profitability and operational efficiency. The retail giant has been extending its tendrils into our homes and lives with its pre-Black Friday deals, following a lucrative holiday sales event last month. Although exact numbers weren't disclosed, Amazon boasted that Prime members ordered over 150 million products from independent sellers during its Prime Big Deal Days sale in October. This, according to CEO Andy Jassy, marked Amazon's most successful October holiday kickoff event ever, with savings of over $1 billion for Prime members. Amazon's Q3 financials painted a picture of steady growth, with online sales climbing 7.1% to $57.3 billion and physical store sales notching up 5.6% to $5 billion. Product sales also saw a healthy year-over-year increase of 6.5%, reaching $63.2 billion. But it isn't just retail pushing Amazon's success, its non-retail ventures have significantly contributed to its impressive quarter, showcasing Amazon's diversified strength. For investors, Amazon presents a compelling case as a multifaceted stock that's not just leading the retail revolution but also innovating across various technological domains. As we continue to shop, stream, and store data with Amazon, investing in AMZN could be an opportunity to take a share in a future that's already unfolding. As we move forward in our stock exploration, keep an eye out for more sector leaders who are poised to enrich your investment portfolio. Shifting gears to the high-octane world of technology, NVIDIA Corporation, operating under the ticker NVDA, takes the spotlight as our third stock pick. NVIDIA is at the cutting edge, designing and manufacturing the graphics processors and software that are the backbone of today's most exciting tech frontiers. NVIDIA's current share price stands at $459.55, but analysts are envisioning a more colorful future, with a mean target price of $655.04. This reflects a bullish stance on the company's value proposition and its integral role in tech advancements. With a return on equity of 40.21% and a profit margin of 31.59%, NVIDIA showcases a robust financial structure, indicative of its market dominance and operational excellence. The EPS growth for NVIDIA this year is a stunning 221.33%, accompanied by a surge in quarterly revenue growth of 101.48% and a jaw-dropping quarterly earnings growth of 849.83%. These figures are not just impressive, they're a testament to NVIDIA's capacity to scale and innovate relentlessly. NVIDIA's stock has enjoyed a meteoric rise of 178% year-to-date, a clear signal of investor confidence and market validation. The company's recent revenue has rocketed past $32 billion, and its previous quarter's earnings per share of $2.70 smashed expectations by 61 cents. These results are what growth investors dream of, reinforcing the rationale for holding NVIDIA shares for the long haul. NVIDIA isn't just playing the game, it's changing how the game is played, especially in the realms of artificial intelligence and deep learning. Investing in NVIDIA means placing a bet on a future driven by powerful graphics, smarter machines, and immersive experiences. Let's continue our journey through the stock market's diverse sectors, seeking out other standout performers like NVIDIA for your investment consideration. We now turn to the dynamic world of digital assets with Marathon Digital Holdings Incorporated, which trades under the ticker MARA. As a frontrunner in cryptocurrency mining, Marathon is at the coalface of the blockchain ecosystem, generating digital assets that are increasingly part of our financial landscape. MARA's stock is currently priced at $9.18, with a year-to-date performance that's nothing short of spectacular, at 168.42%. Despite being 53.81% down from its 52-week high, the company's growth metrics are solid, with an EPS growth this year of 94.71%. Moreover, the quarterly revenue and earnings have seen a massive upturn, with growths of 228.06% and 92.79%, respectively. These figures are indicative of Marathon's robust expansion in the rapidly evolving crypto space. Adding to its financial resilience is the company's quick ratio of 14.91, signaling its strong liquidity position and its capacity to cover short-term obligations without a sweat. On the operational front, Marathon is making waves with its sustainable approach to mining. The company recently launched a 27-megawatt Bitcoin mining project in Paraguay, notable for being powered entirely by renewable hydro energy. This move not only underscores Marathon's commitment to eco-friendly practices but also aligns with a growing trend of sustainability in the crypto industry. With the first miners already on-site gearing up for energization, Marathon is positioning itself as a leader in responsible digital asset generation. For investors looking to tap into the digital currency revolution with a company that's as forward-thinking in its operations as it is in its financial performance, MARA presents an electrifying opportunity. The company's strategic international expansion and commitment to renewable energy could offer a competitive edge as the crypto market matures. Keep watching as we round up our list with one more top stock selection from a different sector, aiming to give you a portfolio that's as diversified as it is dynamic. As we round out our diverse portfolio, we land on Meta Platforms Incorporated, known on the Nasdaq as META. This social media behemoth, formerly Facebook Incorporated, has evolved into a global powerhouse in connecting people and businesses alike. Meta has seen its performance skyrocket over the last 12 months, with an impressive gain of 251.16%. The company's financial fundamentals are robust, boasting a return on assets of 15.05%, a gross margin of 80.09%, and a profit margin of 23.42%. With an EPS growth this year of 66.45% and a quarterly earnings growth of 168.15%, Meta's financial health is as sturdy as the infrastructure that powers its vast array of social applications. Meta's recent third-quarter earnings highlighted its dominance in the digital advertising realm, with ad revenue climbing 23.5% year-over-year, outpacing its largest rival, Alphabet, and growing over 4 times faster than Snap. This performance isn't just a flash in the pan, it's indicative of Meta's innovative edge and strategic focus on ad monetization. What's particularly striking is the expansion of the operating margin within its family of apps segment, which has surged to 52%, demonstrating enhanced profitability. This margin growth is a remarkable feat, rising from 41% last quarter and 34% a year ago. The overall operating margin is equally impressive, standing at 40%, doubling from the prior year's margin. Investing in Meta is more than just a stake in social media, it's a bet on a company that's adeptly navigating the digital landscape and monetizing its unparalleled reach. With its fingers on the pulse of billions of users worldwide, Meta is well positioned to continue reaping the rewards of the digital economy. With these 5 sectors spanning stocks, from the streets of urban transport to the digital frontiers of social media, your portfolio can be as varied as the market itself. Diversification is key, and with these picks, you're poised to capture growth across a broad spectrum of industries. Thank you for joining us on this market journey at Stocks Telegraph. Remember to like, share, and subscribe for more expert analysis and stock market insights. Your engagement is our motivation. Until next time, keep investing smartly, and may your portfolio thrive.